Costco reported quarterly earnings results after the stock markets closed on September 25th, 2025. I'm looking to Costco for information on how the U.S. consumer is behaving and the changing dynamics between the U.S. consumer, increasing tariffs, and how retailers are handling the higher cost of goods sold. So let's take a look at Costco's results, and I'll update my buy or sell recommendation after reviewing the quarterly financial update.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Costco reported net sales for the quarter increased by 8% to $84.4 billion. That was up from $78.2 billion in the same quarter last year. And this result is a little bit higher than what Costco typically delivers in terms of quarterly revenue growth looking back over a decade. Costco is one of the best performing brick and mortar businesses in the world and arguably the best merchant in the world. Total company comparable store sales increased by 5.7% in the 16 weeks that just ended August 31st, 2025 for the company. In the US, it was up 5.1%, in Canada 6.3%, and in other parts of the world 8.6%. Notably, the growth in the United States was the slowest comparably speaking, and that's understandable because the US economy is the one that's facing the higher cost of goods sold as a result of increasing trade barriers. Now, here's the reason why investors, I think, are most enthusiastic about Costco stock. It's because of the growth opportunity. Costco currently operates only 914 warehouses worldwide. Only 914 compared to the more than 10,000 that Walmart operates and the 2,000 that Target has in the United States alone. So the opportunity for Costco to increase sales by increasing the number of locations is huge. It has 914, 629 are in the United States and Puerto Rico, 110 are in Canada, 42 are in Mexico, and the biggest opportunity, in my opinion, is they only have 7 locations in China. Only 7 locations in China. That's a massive opportunity for Costco if they can penetrate that market more thoroughly the way they've penetrated the United States market. And even in the United States, they can easily grow to twice the size of the locations they have now. Every Costco location seems like it's bustling at the seams, like there are too many customers for that one location, regardless of the location I've went to here in Southern California. Regardless of the day or time I go to a Costco, it's filled to the brim. Customers everywhere, the lines at least 5 deep for every cashier, and they can add more locations if they wanted to, but they like this. They like when everyone is going to the same location because they get more value out of one location without investing the capital to add a new location, which would likely cannibalize some of their existing locations. So they're being very conservative with store openings, limiting new store growth to between 20 and 30 every year. So less than a 5% increase in the number of locations added every year, despite the fact that its stores perform so excellently and customers would really like it if Costco opened more locations. So looking at the financial statement more completely, the income statement showed 86.156 billion in revenue, up from 79.7 billion, and the operating income increased to 3.3 billion, up from 3.042 billion in the same quarter last year. So the operating income increased by about 300 million, while sales increased by nearly 6.5 billion. So operating income not increasing anywhere near the rate of increase in total revenue. And the biggest cause of that is merchandise costs, which increased from 69.6 billion in the same quarter last year up to 75 billion in the same quarter this year. So the company already feeling the higher cost of goods sold as a result of tariffs, the company's merchandise cost increasing meaningfully. In the fiscal year, or in the 52 weeks that ended August 31st, the company's cash flow from operations jumped to 13.3 billion, up from 11.3 billion in the same time last year. Costco operates a very lucrative business model where they sell products so quickly that they generate cash flow from sales before they even have to pay their suppliers. And so that operating cycle, that positive cash operating cycle, works extremely well for Costco in that they turn over products so quickly, more than 2x the turnover of a company like Target inventory turnover. And that's a testament to how good of a merchant Costco truly is. So I updated my discounted cash flow valuation model for Costco, increasing the intrinsic value per share to $837, while the current market price is $943. Applying a margin of safety, still Costco stock looks overvalued based on my discounted cash flow valuation model. Now, when I look at the company's forward price to earnings ratio, it looks even more overvalued. Costco is trading at a forward PE of 49, which is more expensive than Amazon, more expensive than Nvidia, AMD, Alphabet, Microsoft. It's more expensive than all of these tech companies, AI companies, right? And it just shows you how good of a business Costco is. It's just one of the Hall of Fame businesses we have in terms of execution, customer value proposition, unit economics, risks, total addressable market. It's just one of the best businesses we have. The trouble is, it's not a secret. Everyone knows just how good of a business Costco is, and it almost never trades at a cheap valuation. The cheapest you were able to get Costco was briefly in late 2022, early 2023. You were able to buy Costco stock at a forward price to earnings of around 30. And that's one of the rare instances when I had Costco stock rated as a buy. I haven't had Costco stock rated at a buy very often in recent years, but when it was trading at these low valuations in late 22, early 23, I did have Costco stock rated as a buy. The trouble is, this didn't last very long. You didn't have very much of an opportunity to accumulate Costco shares at these lower valuations, and it remains to be seen if you'll ever have an opportunity to get Costco at these lower valuations. But I'm certainly not paying these super premium valuations for Costco stock after the company has executed almost without error in recent years, so it's trading at its tippy top valuation. I'm waiting for a lower price to buy Costco stock. I know I may never get it, but I'm okay waiting. I'm better. I feel like I'd rather make the mistake of missing out on Costco stock than paying these super high prices for Costco stock because there are so many other businesses that I could buy. Now, if I was making the choice between buying Costco stock at this price or just keeping my money in cash, I would rather buy Costco stock. But because there are so many other stocks I can buy at better valuations with a better risk reward, I'd rather buy those other stocks. But if it's between cash and Costco stock, I'd rather own Costco stock, no brainer. I'm very confident that if I were to buy Costco stock today and hold it for 30 years, that it would outperform the interest rate I would get leaving it in a money market account or buying a 30-year US government bond, which is yielding about 4.5%. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.